Have you ever tried to listen to music through static? You can't tell something's playing, but it's hard to know if it's loud, soft, fast, or slow. That's how the market feels when you can't tell if a trend is actually strong or just noise. That's where the ADX, or Average Directional Index, comes in. It filters the noise and tells you whether the trend has power or is just pretending. The ADX was developed by J. Walda, the same engineer who created the RSA and ATR. It doesn't tell you the direction of the trend, it tells you the strength of it. Whether price is rising or falling, the ADX shows how powerful that movement really is. Technically, the ADX is part of a system with three lines. The plus DI, positive directional indicator, shows bullish strength. The minus DI, negative directional indicator, shows bearish strength. And the ADX line itself measures the overall intensity of the trend regardless of direction. Here's how to read it. When the ADX is below 20, the market is weak or ranging. When it's between 20 and 40, a trend is forming. When it's above 40, the trend is strong. When it's above 60, the move is extreme. Momentum might be overheating. Think of it like a volume knob of the market. Below 20 is a whisper, barely moving. Between 20 and 40, it's clear music. Above 40 is loud and powerful. Above 60, the speakers might start to crack. Now, let's connect it to real trading. Imagine Euro USD has been going sideways for days, with the ADX stuck under 15. Suddenly, ADX rises above 20 while plus DI crosses above negative DI. That's your early clue that a real uptrend might be starting. Now flip it. Price starts falling. Negative DI crosses above plus DI, and the ADX rises above 25. That means the sellers are in control and the downtrend has real strength behind it. Here's something most beginners get wrong. The ADX line can go up even during a downtrend. That doesn't mean price is rising. It just means the trend, whichever direction, is getting stronger. Let's bring in a real-world metaphor. Think of the market like wind. The plus DI tells you it's blowing north. The negative DI says it's blowing south. The ADX tells you how strong the wind is. Below 20, it's a light breeze, barely noticeable. Between 20 and 40, you can't fly a kite. Above 40 is strong enough to move ships. Above 60, you might want to drop the anchor before it flips you over. Now, let's talk about crossovers, the heart of the ADX system. When plus DI crosses above DI, it signals potential bullish momentum. When the negative DI crosses above the plus DI, it signals bearish momentum. If the ADX line is also rising during that crossover, that confirmation is that the trend is strengthening. But if the plus DI and the negative DI are tangled and ADX is below 20, that's a range. The market is moving sideways and trend-based strategies might fall. Here's why professional traders love ADX. It tells them when not to trade. Sometimes the best trade is not trade at all. Now let's see how traders combine it. If ADX is minor 20, avoid trend trades. Use a range strategies like support and resistance. If ADX rises between 20 and 40, trend emerging. Look for pullbacks to join. If ADX is bigger than 40, strong trend. Ride it, but watch for exhaustion. Here's a simple setup example. Use the ADX with a 14-period setting. Wait for the ADX to rise above 25 to confirm a trend. Enter in the direction of the plus DI or the negative DI. That's dominant. Exit when the ADX starts falling back below 25 or the line crosses the other way. Now, one of the smartest ways to use ADX is as a filter. If you combine it with moving average or RSI, you can filter out false signals. For example, only take the RSI overbought or oversold signals when ADX is above 25. That way you're trading with a strong trend, not in choppy noise. Think of the ADX as your market's truth detector. Price can fake a breakout, but the ADX reveals whether there is a real strength behind it. And here is another pro tip. Watch what happens when the ADX peaks and starts turning down. That doesn't mean the trend has reversed. It means momentum is slowing. The market might start consolidating or preparing for a new phase. So let's recap. ADX measures the strength of a trend, not its direction. The plus DI above the negative DI is bullish strength. The negative DI above plus DI equals the bearish strength. The ADX rising equals trend gaining power, but the ADX falling equals trend losing energy. Below 20, no clear trend. Above 40, strong trended market. In simple terms, the ADX is like your market's engine monitor. It doesn't care where you're driving. It tells you how hard the engine is working. So, in short, the ADX doesn't tell you which direction to trade. It tells you if the trend is worth trading at all. And that's one of the most powerful edges you can have in the market.